The big banks are going absolutely crazy over silver and gold. We also have some Trump news and big news about silver and gold out of China. But first, let's take a look at the silver launch pad. We are waiting to break through this $33, $35 range in silver, and it's going to be off to the races. Let's run out to the charts here, guys, and see what we can look at, which will show us very clearly that we have a lot to be very optimistic about when it comes to the silver price. Now, this is the silver price as of Friday. That would be May 30th. This is the futures price, $33.75. I drew two blue lines on here. One at the current price, that's the top, about $33, and the other down here about $30. This is a one-year chart going all the way back to May of last year. As you can see, we have spent a majority of the year inside of these two lines. This is the launch pad that I was just talking about. If we look at the very limited amount of time that we spent outside of that $30 to $33 range, it is literally almost nothing. Maybe 2 months out of the last 12 months. But I would say at least 86.4% of the time over the last year, we have seen a silver price inside this range. Now, what that means is, the Chicken Littles, the people who weren't on the silver train, those who are afraid and they go, oh, silver's going to go down, they have all sold. They have been replaced by strong-handed, long-term silver investors. It's called consolidation. I'm calling it, and I'm coining this phrase right now, the silver launch pad, because guys, when we can get above this range, this price where we are right now, $33 per ounce. Okay, we poked our head above once, we poked our head above twice, as you can see right there at the $35 range. That is called a double top. The third time that we start to go up above and we get above that $35 range, it is going to be off to the races. It is literally going to be what we're looking at right here. I believe, and that's an S on that rocket. And if you can't tell, hopefully you don't have a dirty mind. That is a rocket. It will be a rocket ship ride, because once we get above $35, $36 per ounce, there ain't nobody up there that's looking to sell silver. At that point, everybody is in the money. Now, let's go take a look at this as well. This is an old classic that we looked at for the last 2 years. This is the cup and handle pattern that we have right now in the silver market. This is actually an older chart, probably from, 2019, 2020. But again, 1980, we had a silver price at $50. 2011, $50. That formed this beautiful cup, between $50 and $50 in 1980 and 2011. What we've been forming for the last, almost 15 years now is the handle, and it's actually gone more up to about this level right here, which would be at the $30 range. Guys, when we break above this, the $50 line, when we break above that, that'll come after what we just showed. That's where we start to talk about these silver prices of $60, $70, $80 per ounce. You know my prediction, April 1st, 2026, we will have $60 per ounce silver, or I will face horrible consequences, because this is a community. And by the way, thank you for being here. Thanks for being part of the basement. We got a lot more to talk about in this live recorded video, but it's a big deal when you're here. I appreciate it. Please give this video a thumbs up, subscribe to the channel. Super chats, super thanks are always super appreciated. But number one, I want you to feel like you found a home away from home, a little community where we can get together and talk about what we love, silver and gold. I also want to say thank you to channel sponsor First Mint. They're a silver mint in Las Vegas, Nevada. They're owned by First Majestic Silver. Yes, that's Keith Neumeyer's company, a silver juggernaut. They are mining massive amounts of silver in Mexico and then shipping part of it to their mint. First Mint is owned by First Majestic in Las Vegas, Nevada, where it's turned into world-class silver bullion products. You can check those out at their website, firstmint.com. Free shipping on orders over $199. Great service, great selection. It's Keith Neumeyer's company, right? It's a company that you can trust. They're key there. The one unique thing about them, this is silver from the mine to the mint to you. No Colmex, no LBMA involved whatsoever, and they have a discount code, VIPRB. Now, let's go take a look at gold, and is there an interesting pattern developing in the gold market? This is a chart from our friend Rashad. He posted this just recently. Gold has been forming an inverse head and shoulders pattern of the past month and looks like it's completing the right shoulder. Breakout may follow any time. Now, we know gold broke out of a massive cup and handle pattern not too long ago. And I just want to show you a head and shoulders pattern is this. Shoulder, head, shoulder. No dirty mind thoughts about my drawings. An inverse head and shoulders is that same guy standing on his head. So this is the left shoulder that he sees. This is the head. This is the right shoulder. It's all happening in this downward trend, which I think means it's actually more bullish for the gold price. So gold could be heading for some very interesting moves as well. One more we want to look at here. I just wanted to pull this up. This is the gold futures chart from Yahoo Finance, and we're looking at a 6-month time frame. I believe what he's seeing here is shoulder, head, shoulder, which could lead us up here. Now, we've got big banks saying crazy, crazy things about gold and silver. So these charts are can be looked at in coordination with news that we're getting from the big banks. What does it mean when the big banks are saying big things? Here's an article from LinkedIn. Bank of America eyeballs $4,000 gold and $40 silver. This came from Money Metals, Mike Mahari. I've talked with him a few times in the past. Great guy, great information. Says Bank of America is eyeballing $4,000 gold and $40 silver by the end of the year or early 2026. Their analysts said that trade-induced geopolitical uncertainty would continue to support the metals, with growing concern about the U.S. government's fiscal situation possibly catalyzing the next leg up. Here's a quote from those guys over at Bank of America. So far, trade disputes have predominantly affected the economy by disrupting supply chains and weakening confidence. Incidentally, the U.S. dollar has also declined alongside these developments. We still believe that gold could end up being less risky investment than treasuries. So they're laying out the normal, normal ideas. Let's go down here to silver, where they say this about silver. Remember, silver's half precious, half industrial. The precious aspect of silver has been driving it higher. The industrial side has been taking a back seat, but this will eventually change. And think about this, guys. What about if investment demand from the West wakes up from the dead? I'm telling you, you and I, we're doing it, but our neighbors, they aren't, right? They are not buying any silver. And if it does pick up, that could be a wave. And we've got silver jewelry demand. I made a whole video about that. Silver jewelry demand is increasing as well, and people are waking up that silver is just absolutely beautiful. Of course, tariffs mean weaker trade condition, and we had a pretty strong trade window between fourth quarter of last year, blah, blah, blah. Okay, so silver, again, this is Bank of America telling us $4,000 gold and $40 silver. We think they're underestimating. I think the prices could go much, much higher. Next, let's go see what Goldman Sachs is saying. Goldman Sachs makes their strategic case for gold and oil in long-run portfolios. This is Goldman Sachs, right? Bank of America, Goldman Sachs. Wait till you hear the next one after Goldman Sachs. But they said they made a case for long-term investors to reconsider the roles of gold and oil in their portfolios, citing historical effectiveness as hedges against inflation shocks and systematic risk. Basically, here, the call to overweight gold is based on two primary factors: the high risk of shocks to the U.S. institutional credibility e.g. fiscal expansion pressure on the Fed and central bank demand boost of gold. So that that first part, the high risk of shocks to U.S. institutional credibility, is a fancy Goldman Sachs way to say that the United States government is up a creek without a paddle when you take a quick look at the U.S. debt clock, which we haven't done for a while. Oh boy, it's almost get the party hats ready, boys and girls. It's almost party time. A sad party, more like a wake. All right, the U.S. national debt is quickly closing in on $37 trillion. You know the whole exercise. That makes this number, the interest, go up. And when the interest goes up, that makes this number, the federal budget deficit, which is currently $2 trillion, go up, which makes the debt go up, which turns into a big poop storm debt spiral. And that's what Goldman Sachs is talking about in layman's terms. Now, silver to dollar ratio. Where'd she go? The dollar to silver ratio still above 1,000. That's compares for each 1 ounce of silver that's mined or created this year. I guess you'd say mined. The number of dollars that the U.S. government is printing via the M2 money supply. So for each ounce of silver being created each year, there's 1,000 U.S. dollars being created. Let's go take a look-see at the dollar index, because that will be a critical. Okay, we're below 100 still. Guys, it's been a couple weeks. So the DXY index is currently below 100. Let's just take a look at the, let's look at 3 years. Wow. You can see we're about the lowest we've been in 3 years. Now, something critical for us to look at here. We bounced off this. That's the $100 range. Almost 2, but definitely 2, 3 times. And now we have broken through. If this goes down, well, let me show you this. This is so much fun for gold and silver investors to look at, because if we go out to a long-term chart of this, it looks way different. Do you notice anything different in this chart? Okay, again, there's 100. I'll draw the red line across there. Okay, as you can see, we only were above 100 just kind of recently, and then for a couple year period back here around 2000, and then prior to that in the 1980s. Guys, what's critical to look at on this chart is this right here. I'm going to blow this up because this is very exciting for anyone invested in the metals, and that is this period right here from about 2001, okay, would be about right here, to 2011. During that period, silver went from $5 to $50. Gold did very well also. But during that same period, the DXY index went from up here, I don't know, about 117, I think it was, if I remember correctly, all the way to down here. It was a bear market in the DXY index. Okay. That was a 10-year period. Again, when silver went from $5 to $50, we can absolutely see that happen again, because remember, we right now are just breaking below this critical key $100 level. Oh, and before I forget, not only is it Goldman Sachs, not only is it Bank of America telling us buy gold, buy silver, I also got a big article sent to me from Fidelity Investments talking about gold. I haven't been able to go through it completely yet, but it's a bullish article about gold from their, executive active trader division. I don't know what it is. Bank of America, Goldman Sachs, and Fidelity. It's crazy. Other big news going on right now. Trump is calling Powell to the White House. That's a big deal. This came from Zero Hedge for the first time since 2019. Trump invites Powell to the White House to discuss the economy. Okay. Talking about emergency rate cuts. You know that Trump is going to be putting the heat onto Powell when he's got him at the White House. Wouldn't we love to be a fly on the wall for that one? The whole thing's falling apart. The whole system is bubblegum and duct tape. We've talked about that. We know that. It'll be interesting to see how this all plays out. Hey, guys, I also want to thank First Mining Gold for sponsoring the gold and silver content here in Ron's Basement. Without the help and support of these sponsors, I couldn't be here. We couldn't be together. First Mining Gold is a development stage gold mining company. 2 massive development stage projects in Canada. They have the Spring Pole project in Ontario, and they have another project, the Du Parquet project in Quebec. These are multi-million ounce projects. The gold's been drilled, defined, it's in the ground. They're working on the permitting process right now. They also have another 1 million ounce project, the Cameron project, located in Canada as well. They got great things going on, a lot of activity. They just released some new drill results from the Du Parquet project. A lot going on with First Mining Gold. Check them out. And if you ever have any questions, this is unique about this company. There's a guy you can reach out to, Paul Morris, in their investor relations department. He's Paul at firstmininggold.com. Thank you to First Mining Gold. Thank you to First Mint for sponsoring the gold and silver content here in Ron's Basement. What about China? A major source of demand for precious metals. It says here, this comes from Kitco and Ernest Hoffman. China gold imports via Hong Kong nearly tripled to 43.5 tons in April as premiums rose. So premiums are going up. But listen to this. I was shocked. China's gold imports through Hong Kong nearly tripled month over month in April. So month over month tripled. The Hong Kong Census and Statistic Department, easy for me to say, announced on Monday. So China is importing massive amounts of gold. The world central banks are buying massive amounts of gold. We have Basel III being implemented this July, okay, which will make gold a tier 1 asset. Guys, the world of precious metals is absolutely changing. The world of investing outside of fiat-based money systems is absolutely changing right now before our very eyes. The last thing I want to touch on, we talk about the economy, and if the economy slows down, that we could have big, swift moves from our friend Jerome Powell at the Federal Reserve. Well, housing is one of the pillars of the U.S. economy. And look at this. This came from Metals and Miners. The U.S. housing market has nearly 500,000 more sellers than buyers, the most on record, and layoffs haven't even really started yet. Look at this chart. It's unbelievable. Here, look at this. Here's the sellers right here. That's the red line. Okay. This is the buyers down here. That's the green line. As you can see, during this whole period, there were more buyers than sellers, but now we're in this situation where the sellers are outweighing the buyer. It looks like there's almost 2 million sellers and only 1.5 million buyers right now. Look, I don't want to be the bearer of bad news. I don't want to be the town crier saying the world is ending or anything like that. But when you look at all the data out there, when you look at the national debt like we did, when you look at what is happening with tariffs and geopolitically in the world, we haven't even touched on that yet. It gets to be a very, very scary situation. I feel comfortable owning silver and gold. I think a lot of you do as well. I also want to say thank you to channel sponsors Ledger. Ledger is the cryptocurrency hardware wallet security leader, and MoonPay. MoonPay is a leading fintech company. They're growing and innovating like crazy. 30 million customers, 180 countries. Thank you to all the sponsors for letting us come together, right? Because this is a community. We love to talk about silver and gold. We love to hang out. You're always welcome here, okay? I want you to be well, and I'll look forward to seeing you soon.